all with us for the latest in our editions of this broadcast. What a group we have so far, 190 and growing. Good to have every one of you here. Niels, I see what you wrote in here, needing some assistance with your Track Your Progress activity on your UTP class. Niels, remember, I can't stress this enough, and this applies to every one of our new traders with the Ultimate Traders package. You should have, if you're considering a tattoo, Neil, this is a fantastic one. I want you to write down your account manager's phone number. Now, I'm going to personally look this up so that you have that. And this is a great alternative to come on our broadcast and ask for this. But I almost see a note of desperation, and I don't want any of y'all to feel that you are desperate to get this one piece. I want to know that we are ahead of the game, ahead of the curve. Chris Beecher is already on the case. I appreciate that, Chris. Thank you for taking care of Neil. Neil, we've got you, my friend, and it's great to have you here. Now, wow, we've jumped into this with both feet first. My name is Mark Maldonado. I'm going to be one of your hosts this evening as we discuss, well, this fantastic opportunity that the remaining portion, the very short remaining portion of this year and the first quarter of next year, 2013, has in store for us. So it's great to have every one of you. I'm watching our ranks grow as I speak. I just got a question, is this being recorded? And yes, it is. So good to have. If you're only here for a portion of it, the entire portion, the entire session will be archived for us. Now, let me do a quick check of audio and video equipment. Please type in the letter Y or the word yes to let me know that you can hear my voice and see the slide in front of you. Hello, Ray, G. Lynn, Celicia, Herb and John, Antonio, AJ, way too many names to actually hello. Tamara, it froze for a second as I saw a fellow Texan on the screen. Mitchell, good to see you as well, sir. Stuart and Ken, Ibrar, Roger. Look at Michael. Michael L., good evening to all from Hearst, Texas. How come all my Texans just kind of slow down as they come around? Up today, $85 on the euro-yen for 5 micro lots. Yes, he says. Michael, fantastic. Watching your progress has been inspirational. Now, Michael is someone who is tackled his education. Michael, what do you attribute to a lot of the success that you've been seeing here? I'd love to find out. I see you here at all the broadcasts. Ramon, a first-timer, great to have you. And how many other first-timers do we have in our audience this evening? Those of you who are fairly new to MTI or your Ultimate Traders package, let's say it's your first week or so, type in me or I, something to that effect so we know who you are. Wow, look at all the newbies. Emil, Robert, Casey, Peter, Lisa, Victoria, Dietrich, Hector, John, and Michael Lee. Michael says he attributes the training of the UTP for his success so far, and Michael, it's great to see. Phil says hello. Ramon from Puerto Rico, first week, he says. John and Roger. Adamola, Gordon, and Loretta says 150 pips on the New Zealand US dollar earlier today. Ron and Knapp, great to have you. For all of our newbies, let me assure you, you are at the right place at the right time, and we would like to be among the first to welcome you to the MTI family. It's going to be great to see your progress as well, just as we have for many of the others in attendance, now 224-25 strong as I speak. Well, again, let me welcome all of you to this week's edition of our FX 180 Trading Opportunity. We have a fantastic presentation in store for each of you this evening. And, of course, this presentation could not be complete without the person, the trainer, the analyst who's put together this entire concept of a presentation. Please help me in welcoming Mr. Josh Martinez, FX Pathfinder, our head Forex analyst from Analysts on Demand. Josh, are you with us?
Yes, sir, I am.
Hey, Josh, did you get to see how many new people we have in our group? Another, wow, 24 it looks as though.
I know. It's very exciting to see everyone. Good afternoon, good morning, good evening to wherever you are in the world. Very glad you could join us all.
Well, with this many people, and we're just coming back from the holiday break that we've had, Pathfinder, it would be great to catch everyone up on this, on the opportunity that we have with this pivot, the FX 180 opportunity, and see if we can all be prepared for some great movement for the duration of this week.
Absolutely. Go ahead and send me controls, and we'll get started.
You got it. Here you go. Wonderful. Now, quick question. How many of you were not with us Monday morning when Josh was able to give us an idea of what to expect throughout this week and with the holiday break that we were experiencing? How many of you were not here on Monday? Well, look at this group. Many of you. So this is your first chance to get a perspective from our chief analyst, from Analysts on Demand. It's great to have you all here. With that being said, Pathfinder, take us through an overview of this opportunity.
Absolutely. Well, first things first, students, can everyone type in a wire? Yes, if you can see my charts and you can hear my voice. Perfect. Thank you very much. Quite a few of us, Alan, James, Gregory, Larry, NAP, Gordon, Christina, Joseph, Will, thank you very much for all the confirmation. Quite a few of us in the room. Well, first things first, let's go ahead and discuss different market movements of what the markets like to do. And you also need to understand that the markets typically will do the same things over and over and over again. That's why we're able to effectively find the patterns that we are. And being a trader is all about recognizing those patterns and then repeating what's been working inside the foreign exchange. So first things first, everybody can agree that if the market's going to go bullish, it's going to make higher highs and higher lows. Type in a wire, yes, if you agree with that. And as well, if the market's going to make or go bearish, it will make lower lows and lower highs. Yeah, absolutely. We're all on the same page. Perfect. Also, the market will move sideways or create equal levels of highs and equal levels of lows, which is also sideways. So we have three directions. The market goes up, the market goes down, and then also the market can go sideways. Well, what a pivot point is when the market creates a large level, and I mean a very large level, of sideways movement, to whereas the market finds an equal level of resistance, and also resistance just means a high, equal highs, and equal levels of support. Now, this concept can be very basic to a lot of students, and hopefully it is, and especially if you see this and you go, well, I can see this and I can do that, because that's kind of the attitude we want you to have, especially when it comes down to take advantage of this market. Now, when the market is at the bottom blue line, this is when we're going to start buying the market, and when at the top blue line, this is when we start wanting to sell the market. So I'm pretty sure everyone's on the same page. What I want to go ahead and do is take a look at our pivot point and also at our area. We're calling this the FX 180 because we're expecting the market to do a 180 U-turn. Now I'm going to go ahead and put up here our levels of resistance and our levels of support. Now, can everybody see how this market since 1993 has been bouncing between resistance, support, resistance, support, resistance, to where we are clearly in consolidation where the market is sideways. Well, thank you, Hal, Arrow, Henry, Rich, Michael, Stewart, Raymond for the confirmation. And so what I want to go ahead and do is ask this very basic question. If the markets are going to maintain past history, if the markets are going to maintain its past history and stay in this consolidation, does the market have a higher percentage chance to go up or a higher percentage chance to go down? Go ahead and type in your response. Yeah, and I agree with Stuart, Tamara, Blessings, Joanna, Raymond, Christian, Beverly, Henry, Errol, Luis, King, John, Ron, Joseph. If I didn't say your name, I apologize. There's quite a few of us here. Yeah, the market has a very, very high percentage chance to go down. Now, this isn't just a ordinary trend level, okay? As we can see, the distance between the top blue line and the bottom blue line is a pretty large level. And what I have here, this is what's called my BI tool. What it does is it measures price over time. And I'm going to left click on my bottom blue line and I'm going to drag this up. Now if you take a look at the upper left hand side, which is my box, and you take a look at range, where it says range, how many pips? Where it says range, how many pips does that show? That's 2,882 pips worth of movement. Now, that doesn't necessarily mean that the market is indeed going to move 2,000, almost 3,000 pips in a straight line. As we know, the market does like to move in waves, and look how the market fell last time. The market made lower low, lower high, lower low, lower high, and then the lower low. When it came up, it made a higher high, higher low, higher high, and now it's working on its way down. So if the market matches its previous bearish move, it could relatively fall about 1,800 pips and pretty much in a straight line. And so this is literally the ideal opportunity or location where we're going to anticipate and expect this market to fall. Now, let me ask this question here, students. How many candlesticks does it take to create an evening star? How many candlesticks does it take to create an evening star? For those of you who do not know what an evening star is, you're going to learn that inside your candlestick formations. Yeah, at least 3. You need at least 3. If you type in 3, you're absolutely correct. Robert, Kenneth, Jose, Christopher, Hugh, absolutely. And as we can see here, this is an example of an evening star. We have a decision, indecision, decision. Now, here's another. This is more of a beautiful example, almost textbook, where we have decision bullish movement followed by indecision candlestick followed by a decision bearish movement. Well, I want to go ahead and show you what we're doing right now. Here's a decision bullish candlestick. Here's a decision bullish candlestick. Last month was our indecision candlestick. This month, we are in the ideal location and area for the market to complete its bearish decision candlestick, creating an evening star. So therefore, is it agreeable, and type in a Y or yes if you agree, that we are in the ideal location for the market to give us a big bearish drop to create an evening star? Absolutely, 1,000% correct. Absolutely, very likely. Now, you know I can't say 100% or guaranteed or absolutes when it comes to the foreign exchanges and directions, because that's not what we do here. We manage risk. We manage risk. That's what we do. We become the master at risk, a master at percentages, saying the market has a higher percentage chance to fall. Now, a lot of you are probably saying, that's great, Pathfinder, but this is a monthly candlestick. This is a monthly time frame. How in the world am I supposed to trade off the monthly time frame? And my answer to that is, I'm not expecting you to trade off the monthly time frame. What I am going to do is expect you to use this monthly time frame for direction. Now, we all agree that the market has a high percentage chance to fall. And I'm getting out a sheet of paper right now to write down these levels. Because the overall direction and is agreeable that the market is expected to fall, I want to plot some down A, B, C, D swings because I know this market will not move in a straight line. The market has a very, very low percentage chance to move in a straight line. It has a much higher percentage chance to move in waves, making lower lows and lower highs on the way down. We all agreed with that in the very beginning. That's why I did that little exercise to make sure we're all on the same page. And one of the ways that we follow or track our waves is through our Fibonacci's. Now, some of you may be saying, what are Fibonacci's? I don't know that yet. That's okay. That is okay. But this isn't the area to learn about Fibonacci's. You can go to Analyst on Demand to learn about Fibonacci's. So, the market is in a down A, B, C, D swing where we're anticipating the market to begin to drop. What I want to do is I want to find this bearish trend right here, starting from the high of, I'm going to write this down, the high of 1.0783 on February the 1st, 2012. And I'm going to go to a daily time frame, and I'm going to see where this market's going to go. File, do charts, and all I'm going to pull up is Australian dollar, Canadian dollar, daily time frame. And here it is. And I'm now going to plot some Fibonacci's and ABCDs to see where this market is going. Now, right away, what you need to understand and view and believe that this bearish move of lower lows and lower highs, lower lows, lower highs is the same move as this monthly time frame of lower lows, lower highs, lower lows, lower highs. The only difference between the monthly time frame and the daily time frame is exactly that. The daily time frame represents, each candlestick represents 1 day worth of trading. So what I would like to do is plot my Fibonacci's or ABCDs starting from the high of February 1st, 2012 at price point 1.0783, which is right here. And I'm going to make this a little bit faster because, you know, this isn't the place for me to thoroughly explain and teach. It's more of a place for me to inform and show you opportunity. So A to B, C pullback is the 618. D extension is the 1.618. So let's see what happens here. D extension is fulfilled. A nice little lows form. So C becomes A, D becomes B, C becomes A, D becomes B. A to B. C pullback is our 382. D extension is the 1.618. We're going a little bit faster here, but that's okay. I'm more looking for overall opportunity. D extension was fulfilled. A beautiful lows about to be formed here. There's our low. So C becomes A. D becomes B. A to B. Let's see what happens. The market pulls all the way back and takes out the A. Okay, so that means the up AB boundary or the down AB boundary was reversed. So we start over, new down AB boundary, A to B, C to D. D extension was fulfilled, C becomes A, D becomes B. And what's happening here, what we're seeing is the market is following the monthly trend, which is a great reinforcement that this market is indeed going to fall. Well, that old A was taken out as well, so we need to find the new trend. And here's the new trend, so we're really getting in the ground level here. So we have our first down AB boundary, A to B. This is where we currently are. A to B. C pullback is the 618. D extension is the 1.618. So let's go ahead and recap here. Does everybody see how this monthly time frame candlestick is in the prime position to begin to fall? Everybody agrees with that? Everybody believes that this market is expected to fall down towards the south? Perfect. Perfect. So what we're doing here because of the daily time frame, does everybody see this latest potential high? Does everybody see this latest candlestick wick high? This high right here on the monthly time frame, I'm going to use this high on the daily time frame, which is this high right here, to plot the AB boundary. And this is what we currently have. Daily time frame is a down AB boundary. The next D extension is going to be via the daily time frame. 1.0238. 1.0238. D extension is expected to fall. The market has already broken the upward trend line. The market is already making lower lows and lower highs, lower lows and lower highs. Students, based off what you are seeing, is there any reason thus far for this market to rally up? Have you seen a reason for this market to rally up? I agree with James, Ron, Pamela, Bordy, AJ, Robert, Lisa, Larry, Daryl, Joseph, John, Tamara. Yeah, I have seen zero reason for this market to go up, because the monthly time frame says we're at the pivot point, we're at the height of resistance, the market's doing a 180, and it should fall. The daily time frame is already showing lower lows, lower highs, lower lows and lower highs. Long term, this baby is falling. So we know long term the market is expected to fall about, we are expecting this market to fall about almost 3,000 pips. But this is where we were last week. And last week when we got on here and we started talking about the FX 180, we were saying, listen, we're around the 618. A double top has just formed. A double top is here. Resistance, 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 resistance. This is the ideal area for the market to begin to fall, and this is what has happened since the last 1, 2, 3, 4, 5, 6, 7, 8 days, which is great to see since December. So it's very directional, very, very directional. Nicholas says, question, Josh, U.S. dollar daily shows D extension at 102.19. Is this right? If the U.S. dollar goes up, will the Australian dollar, Canadian dollar go down? Here's a great question, Nicholas. Really, really great question. Students, does the U.S. dollar affect the Australian dollar or the Canadian dollar? Or does the U.S. dollar only affect U.S. dollar crossovers? Does the U.S. dollar only affect U.S. dollar crossovers, or does the U.S. dollar affect the Australian dollar and the Canadian dollar? We'll get into that a little later on, but the U.S. dollar, you should not use the U.S. dollar to determine market direction on the Australian dollar or the Canadian dollar. We've never taught that here at Market Traders Institute. If it was the Australian dollar traded against the U.S. dollar, absolutely we would say it affects it, but not the Australian dollar traded against the Canadian dollar. Okay, we'll get into that a little later. I don't want to get off topic here. Okay, here we go. So, because the market moves and waves, the market likes to make lower lows and lower highs, lower lows and lower highs, and this next bearish direction to price point, one, I hope you're writing these price points down, 1.0238, which is the daily D extension. I can bring this down to a 1 hour time frame, Australian dollar, Canadian dollar, 1 hour time frame, excuse me, 1 hour time frame, and I can start planning for opportunity, okay? Now, everybody agrees that the market makes lower lows, lower highs. We already established that. Everybody has already agreed that they're expecting the Australian dollar, Canadian dollar to fall. We already established that price point 1.0238, so go ahead and write this down. 1.0238 is daily D extension. You may want to write this down as well because it's really nice to do so. Keeps us in line with what the big picture here is. Okay. And the reason why I put the daily D extension is because long term, the Australian dollar, Canadian dollar is doing this. Take a look at this. Here's the 1 hour time frame, lower lows, lower highs, lower lows. This is what the Australian dollar, Canadian dollar. This movement right here, take a good look. This movement right here is the same exact movement as this of the daily time frame. Same movement. The only difference between the daily time frame, between this daily time frame and this 1 hour time frame is the 1 hour time frame represents, each candlestick represents 1 hour, which means there's 24 candlesticks. There's 24 candlesticks for every one daily candlestick. So keep that into perspective. All right. So what I want to do is I want to focus in on this latest bearish push. And everybody can see and everybody can agree that this market is bearish, right? Does everybody agree with that statement? This market's making lower lows, lower highs. It's agreeable. You like this? Perfect. I agree with you. I think this market's making lower lows, lower highs. Fantastic. Big time bearish. Now, because of the concept of the market making lower lows and lower highs, one of the things that we can do as Forex traders, which is a really, really great tool, which a lot of successful traders like to use, is counter trend lines. Okay? Now, counter trend lines are not exact. Okay? They're not 100%. My counter trend line may be a little bit different than your counter trend line, and your counter trend line may be a little bit different than mine. But basically, I want to go ahead and draw it out for you first before I show you in the live market. When the market makes lower lows and lower highs, lower lows and lower highs, it's moving in a wave. And the purpose of drawing a counter trend line is the following. If I'm expecting this market to fall bearish, let's just say to this yellow circle down here, or oval, the only way, and is this agreeable, the only way this market can fall bearish is by first breaking that blue line. Is that an agreeable statement? The only way this market can fall to touch this yellow circle is it has to first break through this blue line. And so that kind of gives us, you and myself, a heads up of, hey, what is this market going to do? Well, before it does anything, if it's going to fall, it has to break this blue line. Now, remember, there is no 100% absolutes or guarantees that this market will indeed fall to this green line, this yellow line. But is it agreeable that if the market does break this blue counter trend line, we have a high percentage chance it will fall, and that's a pretty good idea to sell the market? I think it's agreeable, and that aligns with becoming a master at risk. Yeah, I agree with Larry, Pamela, Michael, Loretta, John, Daryl, Mitchell. Yeah, I agree with all of you, Joseph, Lisa, Errol. And so that's what, in my opinion, that's what we should do in this scenario. I can't tell you what to do when it comes down to trading, but boy, I can hoot and holler pretty good to let you know what the Ultimate Traders Package says. Because if you sold this market at this counter trend line, at that counter trend line, at that counter trend line, at this counter trend line break, it will be very difficult for you not to make a profit. And that's kind of the mindset you need to have is when it comes down to trading, you want it to be tough not to make a profit. You don't want it to be tough to make a profit. You want it to be tough not to make a profit. And the only way you can make it tough not to make a profit is by using what works. And so right now, is it agreeable that this is what's working? So, therefore, I'm going to type in here, waiting for the market to break counter trend line to short. Okay? Waiting for the market to break a counter trend line to short. Stop will go above last low. Okay? And what I'm going to do is I'm going to do the same thing I did last week. Or I think on Monday. Yeah, I'm going to do the same thing I did on Monday. This is my last low for right now. As of right now, this is my last low. So there's no question. Where my last low is. Excuse me. Oh, not last low. Above the last high. Above the last high. Sorry. Above the last high. This is my last high. As of right now. I'm waiting for the market to either break this counter trend line, so I can start selling, which means I'm going to have an opportunity for the here and now for the next couple of days for about 70 pips. Does everybody see this? Does everybody see this? Everybody see this? Yes, agreed. Everybody's on the same page. Everybody's pretty comfortable. Listen, what we have just done is we built so much confidence in our ability to read the foreign exchange. We have built so much confidence starting from the top down by just simply saying monthly time frame, the market has a higher percentage chance to fall bearish. There is really no signs for the market to go up. and we're long-term, we're expecting 3,000 pips worth of opportunity toward the south long-term. That's awesome. If someone told me, hey, Pathfinder, this market's going to fall 3,000 pips, you just got to look for the opportunity, I would be ecstatic. Then we went to the daily time frame, drew the latest down ABCD swing, talked about how last time we viewed this was the best opportunity to short. Now we're saying the market has about 70 pips until it hits its next major low before the pullback. Because of equity management, we turn to the smaller time frame of the 1 hour time frame to find a good equity management trade to take advantage of the daily de-extension. A lot of you may be asking, Pathfinder, why don't you draw Fibonacci's on the 1 hour time frame? I don't care about the Fibonacci's on the 1 hour time frame because I have the Fibonacci's on the daily time frame. I have the Fibonacci's on the monthly time frame, and I know that the larger time frames will tell the smaller time frames what to do. So everyone is comfortable with the Australian dollar, Canadian dollars, because we're going to move on to the Euro JPY. Type in a wire yes if you know what's going on. Perfect. Perfect. All right. Let's go ahead and take a look at the Euro JPY. Now, students, I know FX Techno, or Jeff Watkins, Jeffrey Watkins, reviewed the Euro JPY monthly time frame. How many pips are you up so far? For those of you who took advantage of this opportunity, how many pips have you made on the Euro JPY? Type in the chat box. Richard says 165 pips. As those are coming in, let me go ahead and show you the movement, or FX 180, on the Euro JPY. Loretta, 141 pips. Keith, 145 pips. Michael, 110 pips. Arrow, 160 pips. So yeah, everyone, Wallace has 190 pips. So everybody's pushing the 100-plus pip mark, which is pretty exciting, which tells me he did a pretty darn good job giving it an appropriate limit. Okay, so we take a look at the Euro JPY monthly time frame. And does everybody see how this market has been bouncing? Since 1993, has been bouncing the bottom blue line to the top blue line to the bottom blue line to the top blue line to the bottom blue line. And if this market is going to repeat history, is it agreeable that we have a higher percentage chance that the market's going to go up rather than it's go down? Do you agree that the market has a higher percentage chance to go up than it does to go down? And it is important that you type in the chat box and you respond. It is very important because you first have to say it, see it, to believe it, and you got to believe it to achieve it. And one of the best things to believe it is by saying it. All right, very agreeable, very, very agreeable. So because the market has a higher percentage chance to go up than does it go down, we're already moving. We've already moved on this pair 1,922 pips. 1,922 pips. We've already moved almost 2,000 pips. We have a remaining balance of 5,011. Does everybody see this? 5,011 pips worth of opportunity left. 5,011. Now, this is very exciting because we know the markets don't typically move in straight lines. Look how when the market fell, we fell making lower lows, lower highs, lower lows, lower highs, lower lows. We are in the ground floor. This is when you build a building, you build a foundation, you put that first shovel in the ground to remove that dirt, everyone claps, and then all the big tractors come in and they build it, right? This is the shovel. We are literally digging in the first step. We have not even made the first wave up. We are working on the ground floor. So for those of you who are in this room tonight, consider yourself at the right place at the right time because this is fantastic opportunity. Now, just like what we did on the Euro JPY, I'm going to turn down to the daily time frame so I can start, finding the daily Fibonacci's. Steve says this could hit support one more time before it decides to go up. That is very true, Steve. And we're going to go ahead and discuss how we can take advantage of this potential opportunity of the foreign exchange. So, does everybody see this bullish trend? Is it agreeable that this market is bullish, that we are making higher highs and higher lows, higher highs and higher lows, right? And the concept of a Forex trader or in any business period is to simply buy low, sell high. You got to buy low and then you got to sell high. You got to buy low, sell high, buy low, sell high. So the question I pose to you, and EMIL says, as a newbie, is there a way to keep track of the movement together with an analyst on these pivot points? Absolutely. Log into the Analyst on Demand. We're going to go ahead and give you instructions on how to log into Analyst on Demand at the end of this webinar. We review this information 19 hours a day. It is fantastic information, especially for newbies. All right. So here's a question. Students, is this market creating a high or is it creating a low right now? Is it creating a high or is it creating a low? It's creating a high, right? And what do we do at highs? Do we buy highs or do we sell highs? Do we buy highs or do we sell highs? That's a trick question, right? We sell them. As any successful business, period, we buy low and we sell high. We buy low and we sell high. At this point in time, the market is looking to create a high, but it has not created a high. So therefore, is it agreeable that the market has a higher percentage chance to fall down bearish to create a low higher than the previous low before it goes back up? Is it agreeable? Yeah, I agree with Larry, James, Peter, Jack, Joseph, Neil, Loretta, Edwin, Mary, Luis, John, Austin, right. What we're doing here, students, is we're putting together the common sense of the market. So now, because this market has created a beautiful and wonderful and readable, predictable trend, we're going to throw some Fibonacci's on here to see where this market's going. Because the old saying says, tell me where the market's been, and I'll tell you where the market will go. That is a wonderful, wonderful, wonderful saying. C becomes A, D becomes B, A to B, C to D, A to B, C pull back, D extension, A to B, C pull back, D extension. That's 58, so let's go to 63. So it's going to go A to B. And we have ourselves a very, very aggressive market with the latest ABCD swing being less than a 0.382 bounce. And the market's on its way up, and we are going to anticipate this market to potentially form a high and pull back to form an appropriate low, probably around the 50618, and then rally towards the north. So, if that is the case of this current Euro JPY AB boundary, we have two options as a Forex trader. Two options is this. Option number one, you're going to look to sell this market on a smaller time frame and wait for a selling opportunity. Option number two, you're going to look for some buying opportunity depending at your price. Now, the buying opportunity, depending on the type of trader, you could buy right now if you wanted to, or you could wait for more an appropriate C pullback. It is a very, 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 very straightforward concept to me as a Forex trader. This market long-term is going up, right? Long-term, this market's going up. Long-term, the market's going up. I got 5,000 pips worth of opportunity. Yep. I know this market likes to move in waves. Period. That's what it does. It's just what it does. It likes to move in waves. Which means if I bought the market right now, I would instinctually be entering in at a high losing percentage trade. Simply because the market likes to pull back and wave. So, If this was a 1 hour time frame, I would say wait for the C retracement, but because it is a daily time frame, the distance to the 618 is about 500 pips. James, at 5,000 pips where the bullish movement does not include any pullback. So there's opportunity both ways. So what I'm going to do is I'm going to turn to a 1 hour time frame on the Euro JPY, and I'm going to set up for a potential bearish reversal. Now that potential bearish reversal may never come. And the thing may just continue up towards the north. But you know what? I would rather be out of a trade wishing to be in than in a trade wishing to be out. For you Forex traders who are out there trading right now, you know exactly what I'm talking about. Especially, we already have the opportunity. We already have the opportunity on the Australian dollar, Canadian dollar. Here is our Euro JPY 1 hour time frame. What a wonderful, wonderful trend. Now, we have been taking advantage of this bullish trend for quite some time. And as we can see, hundreds and hundreds of pips have been generated and made thus far on this Euro JPY. But just as important it is to know when to buy the market, you also need to know when to reverse and wait for the potential U-turn. Right now, the Euro JPY, according to the daily time frame and the monthly time frame, is in the ideal location to begin to pull back. Yes, OLU, this is being recorded for your review. So therefore, students, I want to ask a very basic question. Okay, and I'm going to go ahead and give you a big hint right now. If the market's going to go up, it's going to make higher highs and higher lows. If the market's going to go down, it's going to make lower lows and lower highs. What are we going to wait for? What should you wait for a high winning percentage selling opportunity? What should you wait for this market to do for a high winning percentage trade? Right now it's making higher highs and higher lows. Right now it's making higher highs and higher lows. You want to wait for it to do what? You kind of want to wait for it to start making lower lows, lower highs, right? Remember, if the market's going to go up, it will make higher highs and higher lows. And if the market's going to go down, it'll start making lower lows and lower highs, right? All we need to do is listen to the larger time frame. The daily time frame says the market's in the ideal location to potentially reverse and start to fall before it goes back up. All we really need it to do is to reverse this trend. Right now it's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. All I need this bad boy to do is start making lower lows, lower highs. Bingo, I'm selling. I'm selling. I'm selling. I'm selling down towards the south. Because there's a potential 400, 500 bearish pip pullback before it goes back up. Now, long term, it's going up. There's a higher percentage chance long term it's going to go up according to the daily and monthly time frame. Short term, we're expecting this market to fall. Just simply because the daily time frame says it's in the position to begin to pull back, and a daily pullback is about 400 or 500 pips. So, is there a selling opportunity right now? Yes or no? Is there a selling opportunity right now? Yes or no? I agree with James, Tamara, Emmanuel, Luis, Ron, Terry, Timothy, Diana, Daryl. No, there is not a selling opportunity right now. The reason why is the market is still making higher highs and higher lows, and the market is still in an uptrend. Therefore, I'm not interested in selling this market. So, what I'm going to do here is type this out. Remember, I cannot tell you how to manage your funds. I can't. But I can hoot, and I can holler, and I can scream, and let you know what the Ultimate Traders Package states, because we all learn the same education. So I'm going to say, according to the rules of the Ultimate Traders Package, I'm waiting for the market to start making lower lows and lower highs below the uptrend line, then I am going to look for a bearish candlestick formation and looking for a sell. Okay? Students, this is the best I can do for us. Stop will go above last high. As of right now, so there's no questions of what high I'm referring to. This is the high that I'm referring to right there. And I'm going to choose a limit of 110.70. 110.70 limit. But right now I got to wait for the opportunity. The opportunity is for the market to start making lower lows, lower highs. So everybody's on the same page with the Euro JPY, right? Everybody sees the opportunity. Everybody understands that right now the 1 hour time frame, the market is still in an up ABCD swing, but the daily time frame shows that the market long term is extending towards the north, and we know that the markets thoroughly enjoy to make higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. That's just what the markets like to do. Long term, the Euro JPY monthly time frame has 5,000 pips worth of bullish opportunity. We've already took advantage of 2,000 pips of it, of potential opportunity. The market's going up. Last week, hundreds and hundreds of pips worth of opportunity have been made. Emmanuel says, where did the 5,000 come from? 5,000 came from the distance between the support and resistance from where we currently are. We could measure all the way up. That's 5,032 pips. Now, the Australian dollar, Canadian dollar, since we last looked at it, has already begun to fall bearish, but we're waiting for a counter trend line break towards the south for some selling opportunity. Around 70 pips we're looking for. The daily time frame says the first down ABCD swing is just starting taking place, which means the reversal has just started, which means we're in the great area to get in. And that the Australian dollar, Canadian dollar has about, monthly time frame has about 2,600 pips worth of selling opportunity already left, which means, is it agreeable that between these two currencies of the Australian dollar, Canadian dollar, and the Euro JPY, there's about 7,612 pips worth of opportunity left? Wolf agrees. Larry agrees. Pamela, Loretta, Raymond, Richard, Tamara, Spendon, AJ, Joseph, Jose, Henry, William, Keith, right.
Now, Josh, with all of the potential that we see with these opportunities, you know everyone's glued right now to the whole fiscal cliff issue. And you introduced, or you have been talking to us about this and the potential impact. But can you discuss it a little bit more related to this and, well, potentially what it could produce for us?
Yeah. Well, we're going to discuss about if we're going to discuss the fiscal cliff, then we got to bring up the U.S. dollar. And let's go ahead and do that. File, new chart. Let's bring up the U.S. dollar. We'll bring up the daily time frame. Okay. And here's the deal, students. Here's the deal. The fiscal cliff is right around the corner. And what that basically is one of two things. Number one, the United States of America is going to increase its credit, or its borrowing, or its deficit. We're in over $16 trillion worth of debt. Basically, they're going to say we're going to allow us to increase the debt, which means we'll spend more money than what we make, which means the overall economy goes into debt, which means we owe more money than what we have in the bank. Or the second thing is we do not increase the country's debt, and we cut governmental spending, which is going to cut to over 100 governmental agencies, budget cuts and layoffs, and they're going to raise taxes. Which will put a heavy, heavy, heavy burden on any growth, for the United States. So right now, two things. Both scenarios are pretty bad for the United States. All the experts agree, everyone says the two options on the table are both short-term, pretty bad for the United States. Increasing the deficit long-term is going to be tremendously bad. But, students, for that information, does the U.S. dollar or does the United States increase in value or decrease in value with the fiscal cliff? Is it good for the dollar or is it bad for the dollar? Yeah, it decreases big time, right? It's bad for the dollar. It's pretty bad. Because what are the options? Option number one, it increases debt. Great. Now the United States has more debt. That's not good. That's not good at all. Option number two, we raise taxes and we lay employees off. Well, that's not good either. The country makes more money, but more jobs are laid off because of small businesses have to lay off employees to pay taxes. Well, that slows down growth. All right. Be that as it may, economically and fundamentally, bad news is coming for the United States. Technically, bad news is coming for the United States as well. Let me go ahead and show you. In front of us is the U.S. dollar by itself. This is the U.S. dollar by itself. So, when the U.S. dollar rallies, or goes up, that means the U.S. dollar is gaining strength. When it falls, this means the U.S. dollar is losing strength. Does that make sense? Does that make sense, students? When this falls, the U.S. dollar loses strength or loses value. When this increases, the U.S. dollar increases value. Let me introduce to you my red line. And I'm going to bring up an old saying. Okay, that only my veterans here are going to know. Red means stop. Red means stop. Red means stop. Okay? Red means stop. This is a daily time frame. I'm going to press F3, but more importantly, I want to show you what this red line represents. Okay? Look how this market fell bearish last time it touched this red line. Look at how the market fell bearish last time it touched this red line. Look how the market bounced bullish when it touched this red line. Look how the market fell bearish when it touched this red line. Look how the market fell bearish when it touched this red line. Does everybody see all this? Does everybody see all these bounces at this red line? Everybody see this? Look how the market back in 2011 touched this red line and fell bearish. Students, this is a stop sign in the Forex like no other, where the market touches this red line, and if you just stop what you're doing and you wait for the opportunity or the reversal, there is awesome opportunity along the way. So, therefore, red means stop. That means stop buying this market because it's currently going up. Therefore, it has a higher percentage chance to fall bearish than it does go up. Is that agreeable to say that the U.S. dollar has a higher percentage chance to fall bearish than it does to go up? Is that agreeable? Perfect. Perfect, perfect, perfect. There we go. Because I don't really see a reason for the market to go up, especially with what we just saw. And so here comes my bigger question here. Who does not know how the U.S. dollar works? Who does not know how the U.S. dollar affects Who does not know how the U.S. dollar affects the other currency pairs? Type in a me if you do not know how it affects. Casey, T-A-O, Luis, Ken, Sean, Robert, Albert, Raymond, Daniel, Hector, John. Right. You know, don't be shy. We're all here to learn. We're not here to put each other down. We're here for the same reason. So this is what I'm going to do. I'm going to demonstrate and show you the power of the U.S. dollar. Okay? I'm going to show you the power of the U.S. dollar. Now, students, who is trading the U.S. dollar? Who is trading the U.S. dollar, and who is loving it? I want to know that. Type in a me or a Y if you're trading the U.S. dollar and loving it. Jack, Loretta, Philip, Daryl, Jose, Mitchell, Diana, AJ, Pamela.
Most of these, Josh, are people that have made it to your FX dollar class, it looks as though. And, you know, we just talked about this Monday. While you're showing the U.S. dollar index, is it possible for you to show the FX dollar system that you put together also?
Well, I don't know if I want to do that.
You know what? We just represented this Monday, and so many people. We had about 40 people immediately sign up for your next class. I know about the time issue, but with this class, we've got 285 people. There are at least, well, a good 2/3 that don't even know that, well, it's backed by popular demand. If you just show just a inkling of what you've done, you know, we've got something that we're going to introduce for the whole class a little bit later.
All right, because, Mark, students, one of the things I don't want to happen, there are some systems and some indicators that are just really, really, really amazing. They're really good, and they're kind of like the secrets that you keep up your sleeves and you bring out for special occasions. And the FX dollar is one of those occasions where we brought up last week, we brought up last month, and you know, we said this is only a one-time event, one deal, that's it. And I kind of want to keep it like that, Mark.
If it could be. Yeah, we've, by popular demand, how many of you have heard that this is being brought out one more time for January? Did anyone not know about that extra class that's being brought out? Look at this.
Right.
For those of you that were not aware, this is being provided one more time, both the class and the tool, the system. And as long as all these people are with us, it'd be a great time, Pathfinder, just to spend a couple of minutes just showing what you put together.
All right. Now that you got all the students and traders and you already let the cat out of the bag, I guess I have to. All right. But before we go in the FX dollar, let me go ahead and show you, and let me show you the power of the U.S. dollar by itself, okay? All right. And students, is it agreeable that I'm going to circle two spots? I just want to circle two spots, okay? Is it agreeable? Oh, all my trades are going off, but here we go, the U.S. dollar. Is it agreeable that this is the lowest point in the chart and this is the highest point in the chart? This is the lowest point in the chart and this is the highest point in the chart. Yeah, okay. Now this low is from October 17, 2012, and this high is 11/16/2012. So is it fair to say that's roughly $1, 1 month? Is it fair to say that this is 1 month worth of movement, give or take? Okay. This movement from this bottom line, this top line, represents 239 points. 239 points. I'm going to write that up. 239 points. Plus 239 points. Now, what I'm going to show you here is something pretty amazing. You want to write this down. So if you have a sheet of paper, go ahead and write this down. Okay? We're going to go apples to apples when you go to October 17. October 17. And October 17. Okay, here we go. On October 17 at 10 a.m., a low was formed on the U.S. dollar. At 11:16, at 12 p.m., a high was formed on the U.S. dollar. The U.S. dollar Swiss franc will follow what the U.S. dollar does. Okay? The U.S. dollar Swiss franc does or mirrors what the U.S. dollar does. Does everybody understand that concept? Does everybody understand that? Does everybody understand that? Okay. The euro U.S. dollar and the Great British Pound U.S. dollar will do the opposite. Will do the opposite of whatever the U.S. dollar does. Does everybody understand that concept? Okay. Now, you can start to see here, while the U.S. dollar went up on my upper left-hand side, my bottom left-hand side is the U.S. dollar Swiss franc went up as well. My bottom right-hand side, the euro U.S. dollar went down. And my Great British Pound U.S. dollar, the market went down. So, because of this concept and this mirror or opposite effect that these currencies have, because when the U.S. dollar strengthens, it gains strength against the Swiss franc, driving the U.S. dollar Swiss franc up, driving the euro U.S. dollar down, and driving the Great British Pound U.S. dollar down. If that is the case, is it agreeable that if you can successfully navigate and predict what the U.S. dollar is doing, you have a very, very high percentage chance of being right on the Great British Pound U.S. dollar, euro U.S. dollar Swiss franc, Australian dollar, U.S. dollar, New Zealand dollar, U.S. dollar, Canadian dollar, U.S. dollar JPY. Is it agreeable? All I have is Lisa, Terry, Wolf, Alan, Cynthia. Okay. And so what I'm going to do, right, absolutely, Tamara, Albert, Daryl, Michael. So what I'm going to do is apples to apples. Everyone write this down because I'm going to show you. And I'm going to stop telling you. I'm going to show you what this does. So I'm going to find 1017 at 10 a.m. is right here. And then I'm going to find 1116. Oh my goodness. 1116 at 12 p.m., which is right here. And this movement right here, this low to this high, is 277 pips. Plus 277 pips. For some reason, I think that's low. But hold on. We still got a couple more currencies, okay? 277 pips. Now, students, if the U.S. dollar goes up, should the euro U.S. dollar go down or should it go up? If the U.S. dollar goes up if the U.S. dollar goes up, should the euro U.S. dollar go down, go up? Yeah, I agree with Tamara, James, Peter, Mitchell, Alan, Dan, William, CJ, AJ, right. I'm expecting the market to go down. So let's go ahead, apples to apples, 1017. Let's go ahead and find 1017. 10 a.m., look at this, almost mirrors what the dollar did at 1017. If we form a high, And then on 11/16, let's go ahead and add in a few more bars. And on 11/16, 12 o'clock, we form a low. Now the distance between this high and this low is 480 pips. 480 pips. Let's go ahead and put that in. Plus 480 pips. Okay? Does everybody see this thus far? This low on the U.S. dollar to this high has generated 277 pips worth of movement on the U.S. dollar Swiss franc, has controlled over 480 pips on the euro U.S. dollar. I haven't even brought up the Great British Pound U.S. dollar yet. Let's go ahead and bring that up. Let's go ahead and find 1017. 1017 at 10 a.m. right here, this high. And let's go ahead and find 1116. 1116 at 12 p.m. this low. And the distance from this high to this low is 355 pips. Plus 355 pips from that high to that low. And this is apples for apples. And the purpose of me showing you this is to show you how the U.S. dollar controls the direction of the smaller, how the U.S. dollar controls the direction of the other currency pair. So when the U.S. dollar goes up, when this goes up, the U.S. dollar Swiss franc goes up as well. And the euro U.S. dollar goes down, and the Great British Pound U.S. dollar goes down. So how many pips were generated from this 239-point move? 277 plus 480 plus 355 equals 1,112 pips. 1,112 pips. Now, students, who thinks that's pretty cool? Who thinks that's pretty neat? How and who just learned something new today? Who just learned something new to where they're like, wow, I didn't know the U.S. dollar did that or really controlled this much? Yeah, it's fantastic. I agree with you, Robert. It's very fantastic. So what Mark brought up was the FX dollar, okay? And the FX dollar is a system that I created that takes advantage of the U.S. dollar movement. Now, it's agreeable that if we can harness the U.S. dollar, we should be able to harness the other currency pairs, correct? Correct? Yeah, I agree, right? And so, on average, give or take, for every currency pair that I trade, the U.S. dollar, I get about, on average, 2 pips per point. So if I trade 3 currency pairs, I should get about 6 pips for every point that I trade with. Okay, is that agreeable? Give or take a pip or 2, positive, negative. Okay, I agree too. So what I want to go ahead and do is I want to show you, the student, the FX dollar. Now, let's go ahead and pull this up, the FX dollar. Use. And what the FX dollar does is it takes advantage via signals, the Forex on when to buy and when to sell. Let me go ahead and give you some examples here. Okay. Does everybody see this red arrow pointing down? Does everybody see this red arrow pointing down? Do you think this red arrow means to buy or does it mean to sell? Does it mean to buy or does it mean to sell? Right. It means to sell, right? It means to sell. And if this means sell, this means the U.S. dollar is falling. This means the U.S. dollar is going to lose strength. So if you see a red arrow towards the south, it means the market's falling, which means the U.S. dollar is losing strength. Therefore, we're going to look to sell the U.S. dollar Swiss franc and buy the euro U.S. dollar and buy the Great British Pound U.S. dollar. Does that make sense so far? So I'm using the U.S. dollar as to tell me where to go, and I'm going to trade these other three currency pairs. Okay? Now, you see this red horizontal line? See this red horizontal line? That's where I place my stop. And this green horizontal line, that's where I place my limit. And this market does a great job taking advantage of the highs and lows. Now, signals up here that tells me when to get in and when to get out as well. It's pretty simple. But the markets begin to fall down towards the south. Oops. Market begin to fall down towards the south. Limited out. So I make some profit there. Okay. Then I wait for the next opportunity. Let's go ahead and wait. Excuse me. I receive a buy signal or a green arrow that points up. A green arrow that points up, indicating to buy the market. Right? And then I have a white arrow that says I limited out. Does this make sense so far to everybody? Is everybody on the same page? Okay, who thinks this is pretty simple to follow? You get a red arrow saying to sell, a green arrow saying to buy. You got a green horizontal arrow saying this is my limit. My red horizontal arrow says this is my stop. Now, what if I was able to show you about 6,000 pips worth of opportunity generated from the FX dollar? Roger says, where do the arrows come from? The arrows come from a mathematical man-made equation of recognizing patterns that I was able to get from the FX dollar. Now, what I want to go ahead and do is show you the back-tested results since October. And what this shows is over 61 trades, give or take about 1,300 points were generated. Does everybody see this? Now, so far, who thinks this is a pretty neat system so far? Who thinks this is a pretty profitable system? Who likes the lack of drawdown? Yeah, like Jeremy says, brain dead simple. It tells you when to get in and when to get out. All right, where's my stop, where's my limit? Now here comes the fun part, students. Now remember, students, if I trade 3 currency pairs with the FX dollar, each currency pair averages about 2 pips per point. What is 1,300 times by 6? What's 1,300 times that by 6? What's 1,300 times that by 6? Students, this is showing us 7,800 pips worth of opportunity. Who thinks that's pretty amazing? All right, Mark, I got to bring up the Auto Aussie. We're going to bring up the FX dollar because if they think this is great, students, what if I showed you 7,800 pips? What if I showed you one system that made over 8,000 pips? Who wants to see one system that created 8,000 pips or more? Who wants to see that? Yes. All right. We had to bring it up. Students, let me introduce to you the Auto Aussie. The Auto Aussie. Now the Auto Aussie, readable same way. calls a red signal to sell, green signal to buy. Red signal to sell, green signal to buy. Students, let me show you this back test results. Okay? Now, who does not remember the auto Aussie? Who does not know of the auto Aussie? Raymond, we're going to tell you how to get these systems in a second. All right. Now, the auto Aussie was created. Here at Market Traders Institute, we're constantly building new classes, constantly building the latest and greatest. And the auto Aussie is a part of the next day trading class. And this is kind of a sneak peek of the next day trading class, opportunity, what's out there, okay? Very simple system. What this does is a wonderful, wonderful scalping system where what it's doing is it's taking advantage of these small little waves. Does everybody see these little waves here? Does everybody see how this market makes lower lows, lower highs? Does everybody see how this market is making lower lows, lower highs? Associated with all these highs and all these lows are buy signals and sell signals. This is a 1 hour time frame. So what this is doing is you're allowing you to maximize. It's allowing you to maximize. It's allowing you to maximize this opportunity of taking advantage of almost every single low and every single high. Now, who wants to see the back tested results? Who wants me to say, Josh, kind of stop talking and let me see the results? All right. All right, a lot of us do. Okay, let's go ahead and show the results. You're going to think this is out of a movie or something, I'm telling you. All right. 8,650 pips for the Australian dollar, US dollar. 8,650 pips. And Mark, you want to know what the most beautiful thing about this, student? Want to know what the most beautiful thing about this is?
Tell us.
The auto Aussie can be connected to the auto trader.
There it is.
And you can automatically be traded. So what I want to do here is I want to put these side by side. I want to ask you, the student, to add these up for me. What is 7,800 pips from the FX dollar and 8,650 pips? What's that combined? What's 7,800 plus 8,650? 16,450 pips worth of opportunity. Students, who thinks this is pretty manageable? Who thinks this is pretty manageable to trade? Who thinks they can follow this and say, hey, a buy signal towards the north, which shows me a green arrow pointing up, a red signal pointing down? Now, who would practically give an arm and a leg to have the opportunity just to get their hands on these? And Emil says, I just fainted watching this. All right. You know, the reality of this is these are upcoming systems that's going to be in our next upcoming class. You really don't want to miss out on it. But students, if you're the type of trader that thinks these are pretty simple, and more importantly, let me ask this very last question. Who thinks they can be profitable with this? You know, like Roger says, what else am I going to need besides these two? You know, if you're the type of person that thinks this is easy to follow, easy to use, easy to execute, and more importantly, you can be profitable with this, you're going to have one amazing opportunity tonight. Mark, go ahead and let them know how they can get involved and get their hands on these two systems.
Absolutely. Traders, take a look at this. Now, and Pathfinder, I'm going to need your help with this. Take a look. The FX dollar class, this is backed by popular demand, overwhelming demand just from our previous month in December, the first time we've held this. The next class is scheduled for January and ordinarily valued at $995 for the system and the class itself. However, every one of you in the audience this evening has the ability to take an additional 40% off the cost of this class, bringing the total cost to only $597. For those of you who have a definite interest in joining us for the next of the series of these classes and get the technology for the system for the FX dollar, type in your phone number right now. Now, Josh, you've mentioned a fantastic bonus for those people who have an interest in this class. Can you make that very clear for everyone?
Oh, my. Mark, students, this is going to be the most unbelievable late Christmas present, early New Year's opportunity that you're going to get from Marketers Institute. This class, for the U.S. dollar, tonight, you're saving 40% off. If that's not good enough, we're going to throw in the Auto Aussie. I wasn't going to do that, but since we brought this up, I'm going to throw in the Auto Aussie. So you're going, this is really silly for me to say, but you're going to get 2 automated systems that provide easy-to-read buy signals, easy-to-read sell signals that tell you when to get in, when to get out, that have accumulated over 16,000 pips for just $5.97. Students, put in your phone number right now. Put in your phone number now. Get involved. This class is in January. I know we have about 40% of the students in this room have not taken any continuing education class. Any student, we have 40% of the students in this room who have not furthered their continuing education. This is a great, great stepping stone to get started. Saving 40% off, but more importantly, where else on earth for less than $600 US can you find the ability at a standard lot? What's 16,450 times the standard lot? Okay, all right. What's 16,450 times that by $10? That's $164,500 US. Talk about return your investment. This is
I'm so glad you're talking while I'm struggling to write down all the numbers that are coming through here, just to make certain that I haven't missed anyone so far. Ron, we've got your number. Stephen, we've got your number also. Phyllis and Mitchell both put their numbers down. Roger, we've got your number also. And Lisa, I saw you there also. Mark, I see you've just put your name in, but let me jump back to the list. Roger again, this is our second Roger. Raymond. Larry, we've got your number also. Emil, we've got your number. Jerry's on our list for this special promotion. Catherine, we've got your number also. Fantastic. We're looking forward to speaking to you also. Milan, now the numbers are continuing to come in, and at this point I'm going to turn over the number gathering to the head of our account management team. While he is keeping track of all these numbers that are coming in. This is wonderful. I'm so glad that every one of you has taken advantage of, in effect, 2 systems, 2 classes for this incredible discounted price of only $597. It is a fantastic opportunity for every one of you to continue progressing with your understanding of the Forex market as we're getting ready for 2013, this year of Forex trading that many of you are getting ready for. Daryl, I've got your number. Robert, thank you for that as well. Brandon, I see you put your number down also. Hello, Mark M. Well, how funny, I'm also Mark M. Got your number. Thank you, Mark. Milan, thank you. Dan and Tao, we've got your phone number. Thank you. You got it. Albert, I see what you wrote down. We're looking forward to seeing you there also. And Wes also is on our list, so thank you, Wes, for that. It's a fantastic opportunity. Now, can you, Josh, while we have you here, I know we don't have the date specifically for either of these, but can you tell us, what, for someone who's brand new, because you saw we've got 24 brand new students who might feel that this is too advanced, this is something beyond them at this point. How should someone feel if they've just recently started with their education with MTI and the Ultimate Traders Package?
Mark, this is a very, very great question, a great concern a lot of the newer students have, the novice students. Students, for those of you who just joined the Marketers Institute, we have priced this to make it such an affordable, low-cost, high return on investment, to whereas we're kind of incentivizing you, if you don't put it that way, we're kind of incentivizing you, giving you the opportunity to take this. One of the great things that you have, especially with the newer students that the older students have created, is habits. Now, if you can allow us to mold you with the Auto Aussie and the FX dollar and allow you to harness the power of the FX dollar, we can mold some really, really great positive habits into your trading. When you start learning on your own, you start learning going through the Ultimate Traders Package, a lot of the emotions begin to take place. Emotions of where do I place my stop, where do I place my limit. I'm not taking anything away from the Ultimate Traders Package because it literally has everything you need to become an Ultimate Trader. But we also know that the more options you have, the higher percentage chance you have to enter in the right direction. There's nothing more powerful out there as of right now that I've seen more powerful than trading and harnessing the FX dollar. It is amazing, and this is something, you know that old saying, like when it comes down to insurance, Mark, that says, well, I can't afford insurance, and it says, well, you know, you really can't afford not to have insurance because what happens if you get into an accident? This is kind of one of those things for $597 US. You really can't afford to pass up this opportunity, because this is something that you'll probably never see again, the Auto Aussie and FX dollar together next year at all, because this is something very, very special.
You know, I like the way you present that. That makes perfect sense. For those of you, and we know the numbers that are focusing so much on their Ultimate Trading Package, they haven't gotten into any of the supplemental courses that MTI has to offer. With as much profit potential as these classes hold, this is the right time and certainly the right cost to actually get 2 systems and 2 classes for such a small price, $597. Now, I've got to acknowledge a few of you, because we want to make sure no one falls between the cracks here. Nikolai, we've got your phone number. Thank you, my friend. Raymond, we've got your phone number. Thank you. That may be Ramon. Yes, Ramon. Niels, I see you put your phone number down also. And Niels, we're looking forward to speaking to you about this class and answering your additional questions also. Raymond, we've got your phone number. We're looking forward to speaking to you also. Ibrar, hello, Ibrar. We are going to be speaking to you also. Sharon, we've got your phone number. Thank you, Sharon. And Wes, we've already, just to confirm again, we've got your phone number. So wonderful. It's great to see the numbers, the sheer numbers of you that appreciate the opportunity and the ability to take advantage of the education that MTI and specifically that Josh is able to offer every one of you. Larry, how funny, I've got 2 Larrys side by side. Larry L, we've got your phone number. Thank you, Larry. And Larry A, we've got your phone number also. Now, I'd like to remind each of you, our work is not done with this presentation. It actually just begins. We want to remind you, for those of you who put your phone number down, stick by your phones, be prepared. We are going to call you immediately following our presentation. And in order to get through each of you, to make sure you're registered for this event, well, we want to make certain that we get to you as quickly and as succinctly as possible.
Hey, Mark, can I interrupt for a second?
Please, go ahead.
Hey, students, I'm glad Jeremy brought this up. Jeremy says, I took the first dollar class for $597, and it is nothing compared to what you get. I'm glad you brought that up, Jeremy, because a lot of our students, believe it or not, have already paid for the class just by taking it. If you really think about it, $597 is pretty simple to obtain. And I would have to say I've had about a handful of students already emailing me, thanking me, allowing me and letting me know that they've already paid for the class 2, 3, 4 times over after the first week of having the FX dollar. I thought that was really nice to share, and thank you, Jeremy, for sharing those results. Very exciting, very ecstatic, and thank you. And I hope you don't mind I read that out loud. I should have really asked.
No, are you kidding me, Jerome? That's I appreciate your feedback, and looking forward to seeing your continued progress out here, my friend. You're doing great. Henry, I see what you wrote down. We've got your phone number also, Henry, so we're looking forward to speaking to you. Now, it could be, I've got to acknowledge all of these. Peter, we've got your number, and we spoke about the Larrys that are also here, so great. Now, Henry has brought up an interesting question about those that have previously purchased the FX dollar course, but they're really interested in this Auto Aussie course. Now, for those of you that have that $1,000 voucher that you had, consider this. The $1,000 voucher cannot go toward this promotion. However, for those of you who are thinking about getting an additional course already and using that $1,000 voucher, possibly off the swing course, or the scalping ballistics course, or any systems course, fundamentals course, or even the mastery. For those of you that exercise that $1,000 voucher before the end of this week, we'll throw in the Auto Aussie course with that. Does that seem fair? Is that okay with you, Josh, if we were to do that?
I think that's very fair. I think it's more than fair. I think we're going to, do right by a lot of our students here as well.
Outstanding. So let me make that clear once again. For those of you who have a $1,000 voucher, if you apply that $1,000 voucher toward any one class, and Robert is already saying fabulous, evidently he was planning on it already.
And that's also including charts too, right, Mark?
That is, I'm so glad you said that. For those of you who are applying that $1,000 voucher toward any of the normal classes that MTI puts out or an annual subscription or more, we will throw in this Auto Aussie system and class. Just let them know. If you do, please put down the phone number next to your phone number, unless you've already put your phone number down. If you're only now putting it down and you're applying your $1,000 voucher to another class, put down $1,000 voucher so we know exactly what to pass on to your account manager. Now, Josh, with all these numbers, I think the best thing I could do is just sum it up so we can let all of the account managers contact each and every one of our students that has an interest in this promotion. But as always, fantastic to have you with us, and we're looking forward to having you on again, I think, by the end of this week.
Yep, looking forward to it as well, Mark. Thank you, students, for allowing me to be part of continuing education growth. Students, for those of you on EDGE, just go ahead and put in your phone numbers. You give the opportunity to speak with one of the representatives, especially if you have a few more questions. This is something you really, really do not want to pass up on. I really do not interfere too much. I'm a real technical guy, but listen, when something like this happens, I hoot and I holler and I scream, just like with trading opportunities, and I say this is a great opportunity to get in, buying or selling. I'm putting my neck out on the line. I'm putting my reputation out on the line. And this is an offer, and this is a class that I'm willing to put my name out, and I'm willing to risk my reputation to say this is something that's pretty amazing. But other than that, students, I will see you again on Friday. I'm looking forward to it. Great trading, great opportunity this week. Watch out for that U.S. dollar weakness and be prepared for the fiscal cliff. But on that note, every day helping traders find a way. This is FX Pathfinder.
Thank you, Path. Always great to have you here. And for you, the audience, let me also remind you, while you continue to put your phone numbers in, we will have a continuation of our Analysts on Demand broadcast that's immediately following our presentation. And also tomorrow evening, we've got a very special presentation with a very special guest as well. Please, for those of you who have an interest in joining us, what usually is a Thursday edition of our MTI 4.0 charting software is instead a fantastic opportunity to speak about the current, Forex condition, Forex opportunities that will be affecting us all. I'll simply say this. It wouldn't be unexpected to see the FX chief himself in our presentation tomorrow at 6 p.m. We're looking forward to seeing all of you there for this very special presentation on this holiday week, this shortened week that we've got. Now again, Patrick, I've got your number. Alan, and Judith for Ralph, or on behalf of Ralph, I've got your phone number. Let's see, Steve, I've got your phone number also. Kay, excuse me, Kay, I've got your number also. I see what you wrote down, and we will be in touch about that, Kay. Milan, we've got your number. Ayadele, we've got your number. Thank you. Victor, we're going to keep everyone posted for the next date that we choose for the FX dollar and for the Auto Aussie classes that will be available. Alan, thank you. We've got your phone number. Blessing you as well. And for the rest of you that have a definite interest in this course and the promotion that we've got that is simply too good to pass up, we will leave this window open and allow you to type in that information. Wolf is asking for a confirmation for tomorrow's class. It is tomorrow at 6 p.m. Eastern, Wolf, and I appreciate your question. I saw one email that said 5 p.m., but I have had that confirmed at 6 p.m. Eastern. Please keep your eye for an additional email just as a confirmation of that information. Keith, we just had your phone number also, and Wolf, thank you. Sean, thank you as well. With that note, with all these additional numbers coming in, I will keep the window open. I'll make certain that your calls stay by your phones. On behalf of Market Traders Institute and Next Step Financial Holdings, we'd like to thank you all once again for joining us. Have a fantastic evening and good trading. Good night.